Good evening. My name is Megan Dalaya, and I'm an advisor for Dalaya Investments. Today, I want to present an opportunity for investment in AstraZeneca Pharmaceuticals. AstraZeneca was founded in 1999 as a merger of Astra AB and Zeneca. Over the past 5 years, AstraZeneca has lost patent exclusivity on several of its major drugs. This means that companies can now come in and produce generic versions of these drugs, and this heavily impacts AstraZeneca's sales. Over the past 5 years, the total loss of average exclusive patent profit has been $40 billion US. Patent exclusivity losses are all part of the drug development life cycle and common throughout the pharmaceutical industry. What's important to focus on is how the company recovers from and reacts to the loss of major drugs in its portfolio. In Q1 2017, total revenue was $5.4 billion US, a decline from the previous quarter due to patent exclusivity loss, specifically on Crestor in the United States. Despite the decline in revenue, the return to growth model has held strong, as new product sales grew by 6%. Additionally, in Q1 2017, January through March, emerging market sales were up 9%. According to the latest investor report released by AstraZeneca, the Q1 earnings per share was 45 cents. And there is a positive note for new investors, as AstraZeneca paid out dividends of 95 cents per share in February 2017. AstraZeneca has had several achievements lately in the submission space. Phase 3 announcements have been made, major drug readouts have also been made, but the most exciting portion of their achievements have been the regulatory submission acceptances and the regulatory approvals. 2017 is a potentially defining year for the company. Overall growth improved in Q1 thanks to increased revenue coupled with decreased cost in research and development and selling, general, and administrative or SG&A costs, as we see in the chart here. AstraZeneca is in a unique stage of rebranding and development, where an investment today will be rewarding in the future. They have heavily invested in research to fuel their growth and meet the goals set out by their senior executive team. According to the Center for Medicaid and Medicare Services, or CMS, they have paid over $50 million US in research fees and expenses to these teaching hospitals, and even more than this globally, to continue to grow and expand their product offering. A $5 million US purchase of AstraZeneca stock is recommended. With recent prices, this equates to around 148,000 shares at a little over $33 per share. Additionally, given the focus on immuno-oncology and the strong research and development package it has built, AstraZeneca is in a position to be sought out for purchase by bigger pharmaceutical companies. Last year's rumored Pfizer takeover of AstraZeneca caused an upward spike in stocks. This is extremely beneficial to current investors. Investments will now multiply through the regrowth of the company as it recovers from the patent exclusivity losses it has had and as it continues to grow its portfolio. Now is the time to invest in AstraZeneca Pharmaceuticals.